into your hands. We pray in the name of Jesus that whatever we thought we'll be able to understand. We pray for our facilitator that whatever you teach us, we'll be able to understand well. We commit this meeting to your hands. We thank you for everything that is going to happen. In Jesus' name we pray, thanksgiving. Amen.
Amen. Okay, so let us begin. So I believe you all have the document.
Yes, sir.
Yes.
Yeah, so let's look at it. Question one, it says Agri Limited is an ultramodern company that specializes in the manufacture of smartphones for countries within sub-Saharan Africa. And so the company operates 3 branches. Operating results for the last period are as follows. And it says management is concerned about the profitability of Division C, and the CEO has tabled a proposal that the division should be closed. You are supposed to advise management on the decision to close down Division C. So what type of decision is this?
Shut down.
So this is a shutdown decision. This is a shutdown decision. And so with shutdown decision, what is the decision we learned? We have to assess the division, whether it is making what contribution or not. Is that clear?
Yeah.
Yeah. So which division are they trying to close? They are specifically talking about Division C. Is that clear?
C. Yes.
Good. So you assess only Division C. It's assessment of Division C. You assess only Division C. So if you are assessing it for contribution, what is the revenue? The revenue is 200,000.
200,000.
Then you deal with only what we call relevant costs. Is that clear? So the relevant costs are the variable costs, they are direct material. Direct material, how much? 8,000.
Direct material
40,
is 8,000.
40,000.
Revenue is how much? 200,000.
200.
Direct material is 40,000.
Yes, sir.
Yes.
What about direct labor?
60,000.
60,000.
Direct labor 60,000. And then now apportioned fixed cost. Is it relevant?
No, it's not relevant.
It's not relevant. So these are the only relevant costs there. So 100,000. When we take it out, what do we get?
100,000. 100,000.
So meaning that this is giving us a contribution of 100,000. Can you see?
Yes.
So with this contribution of 100,000, since it's making contribution, what must we do?
We subtract for the revenue.
We must maintain it, right?
Yes.
Yeah.
So the advice will be that management should maintain Division C. Since it generates contribution. Now look at this. If you look at the contribution that Division C generates, 100,000, let's look at the total fixed cost. You know, contribution is used to take care of fixed costs. Is that clear?
Yeah. Yes.
Let's look at the total fixed cost of the entity. The total fixed cost of the entity for Division A, it is what? 5,000. And then for Division B, it is what?
60,000.
6,000.
And for Division C, it is what?
60,000.
Now, when you add all this, gives you what?
21,000.
Now, look at something. The 100,000 contribution that is generated by Division C alone, it pays almost all the entire fixed cost of the company. Are you getting it?
Yes, sir.
Yes.
So, should you close it down, even though you are seeing Division C to be making losses, if you close down Division C, do you see the impact?
Yes.
Yeah.
Do you see the impact? That division alone,
Yes.
one division is paying for the whole company's fixed cost. So you are seeing it there as a useless division, a loss-making division, but it is taking care of all the fixed costs. So should you close it down, it means that all these fixed costs will now be borne by the entity itself, another division. It will now be borne by another division. And that will put a lot of pressure on the company. Are you getting the point?
Yes, sir.
Yes.
Yes. So that is what we are talking about. So you see that now the explanation is that the contribution of Division C is the entire entity fixed cost. You get the point?
Yes, sir.
Yes.
Hence, closing it will negatively affect the company. Now, so now that we are maintaining it, what are some qualitative factors we have to look at? Now that we are maintaining it, what are some qualitative factors we have to look at? Yeah, Abdul Kudus, you can talk. It's not ready. Let's move on. Yes, now that we are maintaining the division, remember the division originally is making losses, but now that we are maintaining it, what do you think we must do? What do you think we must do? Yes, we must
Hello.
train the staff. Are you getting it?
Hello.
Yes.
Yeah, what I was saying is that
Mm-hmm.
the total fixed cost,
Mm-hmm.
I'm looking at it like one division C is close. The 60,000 total fixed cost will no more be in existence.
So you see, we are saying that fixed cost, whether you produce or you don't produce, you incur that fixed cost. Are you getting the point?
Yeah.
Are you getting the point?
Yes,
Yeah.
sir.
So I mean
Whether you-
that whether you produce or not, you incur it when that particular division is there.
Remember, it is an apportioned fixed cost.
Yes.
It is an apportioned fixed cost.
Question, yeah.
So it means that fixed cost is already there.
That fixed cost is already there and it has been shared for they've given every department its cost. Probably it's a fixed cost for the head office, which they've shared for all the divisions. Are you getting the point?
Into electrician.
Yes.
Right.
So without division C, it means that the whole 71,000 must be borne by just A and B. Are you getting the point?
Yeah.
Yes.
All right.
And you know the impact. Yeah, back for junior. Yes, back for junior.
Okay.
Sir, please, with Division C, is there some hidden cost? Because looking at the cost element, I'm getting 160. So that means it wasn't making loss per the statement.
Oh, I think it's a typing error. It's a typing error. Maybe one of the costs is
Yeah.
maybe one of the costs, maybe there is a difference in cost, but I think it's a typing error. I think one of the costs, there is a difference in cost. So just focus on the profitability.
Okay.
Yeah.
Okay.
So what now? These ones are to introduce
Is it not the revenue side?
the revenue side.
Yeah, because if we make the revenue 100,000 right now, it will bring us to that loss of 40,000.
No, but the total cost they've written total cost of 240,000. Can
Yes.
you see?
Yeah.
So it's an error. I think it's a typing error. But the idea is what I want. These are petty questions I'm using to introduce you. We'll go to bigger questions. So just bear with me. Yes. So what are some of the qualitative factors we have to look at? Now that we are maintaining the department, what should be some of our qualitative factors? Yes. Retraining of staff. Remember, the department itself is making loss. So now that you are maintaining it, it means you have to retrain what? The staff. Are you getting it?
Yes.
Yes.
So efficient management of material and labor cost. You see, now that you've seen that you have to maintain it, then it means your cost that is there, the material and labor cost, you have to manage it efficiently to turn around the situation. Are you getting the point?
Yes.
Yes.
Good. So these are some of the qualitative factors. Like I said, these are petty questions to introduce you to the game. As we are going, they'll be growing. Can we move on?
Yes, please.
Yes.
Yes.
What's happening? What is happening?
I thought this thing has to do with the qualitative factors has to do with customers and the one you taught us the other day. What has to do with that?
So clearly you didn't listen to me.
So,
Clearly, what I said was the qualitative factors are other factors of what is happening. The qualitative factors are other factors that would also affect the decision. That means that other factors that are not monetary issues, they are not figures, but they can also have an impact. I don't know why. Oh, what is actually happening? I don't know why my board. Colleagues, let me close the whiteboard and use the Zoom whiteboard and see. Let me use the Zoom whiteboard. I think you all have the question, right?
Yeah, please.
I have the question.
Yes, let me use the Zoom whiteboard and see what. Okay. So that is that. I'm saying that the what is actually happening at all. A moment, please.
Yes, sir.
Hello.
Yes, sir.
yes, sir, yes, sir.
Let's look at question 2. Let's look at question 2. I mean, when the lesson is finished, I'll have to quickly get someone to service this. definition. Okay, so someone should read question 2. Someone should read question 2.
Mercy
Yes.
Limited operates 3 divisions of its agro-processing company. The details of its operation for the year ended 31st December 2016 are as follows. Revenue, 800,000,
Go to
B,
the
200,000,
Go to
C,
the requirement.
150,000. Cost of sales, 80,000.
Go to the
As the management accountant of the company, contribute to the decisions to shut down Division B.
So management want to shut down Division B. Can you all see that Division B is making loss?
Yes, please, 10,000.
Yes. So to decide whether to shut it down or not, we need to run Division B on contribution basis. So let's see contribution basis for Division B. What is Division B's revenue?
150,000.
Division B is 200,000.
200,000.
Then the relevant costs. Now they said cost of sales comprise of what? 60% fixed cost.
Fixed cost.
And then 20% of the fixed costs are what? Division specific, right?
Division specific, yes.
What it means is that for Division B itself, look at this. For Division B itself, the costs over there, if we are analyzing Division B's cost, they are telling that cost of sales comprise 60% what? Fixed cost. It means that the fixed cost is what? 60%. Calculate 60% for us. Calculate 60% of that fixed cost for us.
126,000.
126,000. And then variable cost. So variable cost is what? 40%, yes.
84,000.
84,000.
84,000.
Yes.
So this is the whole Division B's cost. This is the whole Division B's cost of what? 210,000. Then the question said what? 20% of the fixed costs are what? Division specific. Are you getting it?
Yes.
So out of this fixed cost, the specific fixed cost is what? 20%
20% of
of the 126,000, right?
Yes.
Give me what?
25,200.
25,200. So now we splitted Division B's cost. So if we are assessing Division B for contribution basis, yes, what will be the relevant cost? We have a variable cost of what?
84,000.
We have a variable cost of what? 84,000. And then there is a specific fixed cost. Is it relevant?
Yes.
Yes.
So specific fixed cost, which was what?
25,200.
25,200. So when we take this out, what do we get? What's the total for this? Yes. What's the total for this?
109,200.
109,200.
109,200. When you take it out, what are we getting as contribution?
9,800.
90,
800.
800. So you see, Division B is making contribution of 9,800. Now let's look at the whole entity's fixed cost. Let's look at the whole entity's fixed cost and see how we can conclude reasonably. Now, give me the whole entity's fixed cost and let's see. A will be what? Division A is what? 126,000, right?
Yes.
Right? What is Division B's?
No.
Sorry. Division A's fixed cost? Yes, we have been told that the fixed cost is 60% of the cost. So calculate 60% of
48.
that's
48,000.
80,000. 60% of 80,000, giving you what? 48, eh?
48, yeah.
And then division B was what?
126.
126.
What about division C?
72,000.
60% of 120,000,
Yes, sir.
22,000.
giving you 72,000.
Yes.
So what is the entity's total fixed cost? What's the total fixed cost of the entity?
246,000.
46,000.
246,000. Do you get it? Now, the contribution of 9,800 that division B is making. Yeah, so percentage of division B's contribution. Let's look at the percentage of division B's contribution to total fixed cost. Division B is making contribution of 9,800. By the total fixed cost, what is the percentage?
36.91%.
So almost 37%. Can you see?
Yes, sir.
So it means that division B alone is contributing to 37% of the entity's total what? Fixed cost. Are you getting the point?
Yes.
Yes.
So what will be the decision? So what will be the decision?
Fine. Don't shut down.
Division B
To keep.
must be maintained. Yes, division B must be maintained. Division B must be maintained. Since it generates a contribution of how much? 9,800, right?
Yes.
Which pays 37% of what? The entity's total fixed cost. Are you getting the point? Are you getting the point?
Yes,
Yes,
sir.
sir.
Yes, so put them down. Should I go up for you? Now,
Yes,
because of
please.
our network today, let's write very fast because we don't know what may happen. I'm having serious challenges, so please write and then write very fast so that you don't lose information. We don't know what will happen at the end of the lesson, so it's better I allow you to write and then. So please write so that it's better you write. I don't want you towards the end of the lesson. I don't want anybody to have problem now asking for screenshots. But from the look at things, we may not get our screenshots. Are we okay?
Yes, please.
Can I move?
Yes, please.
Yes,
That
sir.
one.
Can I move?
Yes, sir.
Can I move?
Yes, please.
Yes.
Please, can you move down a bit? Specific.
Are you okay?
Yes, please.
Are you okay?
Yes, please.
Finish that. Can we move on? Can we move on?
Yes, sir.
Yes, please.
So can I go up and continue?
Yeah.
Can I go up and continue?
Yes, sir.
Yes.
Okay. So let's look at a make or buy decision or outsourcing decision. Merban Limited. Melbourne company manufactures a component which it finally assembles into its main product. The component is manufactured in two manufacturing stages, that is stage 1 and stage 2. The normal annual production of the component is what? 50,000 units. And then the following are the standard cost of performing the manufacturing stages. So they're giving you stage 1 cost and stage 2 cost. Then total cost for both stages is 458,000. Additional information. 1, the company will not require stage 1 if the components are bought from outside. 2, the other overhead cost, comprising both fixed and variable overhead, is allocated as 36,000 plus 10% of direct labor cost. The outside supplier will supply the 50,000 units a year at a price of 4.35 pesos per year. The company will have to pay freight of 10,000 cedis on purchase. If the components are purchased, this will release space for performing stage 1. The opportunity cost of the space is 20,000 per annum. You are to advise management on the decision to outsource the manufacturing of the component. Now, here is the case: you are a company, you are producing, and there is a certain component. You produce the component in stage 1, and then you go ahead to finish it up in stage 2 before you put it in the main product. Then they are telling you that you are deciding to outsource the production of that component to a third party. So now the question is asking you to advise the management whether it should outsource or it shouldn't outsource. So a make or buy decision, what will be the decision rule? Yes, make or buy decision. What will be our decision rule?
You buy from the
Compare the
lowest.
relevant cost,
Compare.
We'll compare
the
the relevant
relevant
cost
cost
of
of
making
or
against the
buying and
relevant
choose
cost
the
of buying,
lowest.
right?
Buy.
Then we choose the
You
lower.
choose the lower cost. Lower of the two.
Now look at this. You see, if we make the product, we incur stage 1 cost, we incur stage 1, and then we also incur stage 2. If we make, we incur stage 1, and then we also incur stage 2. But then if we buy, we will not incur stage 1, we will incur only stage 2. Is that not it? The question said the company would not require stage 1 if the components are bought from what? Outside. So if I make, I'll incur both stage 1 and stage 2. If I buy, I'll incur stage 2. What it means is that as for the stage 2 cost, whether I make or I buy, I'll still incur it. True or false?
True. True.
So because I will incur it constantly, the stage 2 cost will not be relevant. Is that clear?
Yes.
Yes.
So we are saying that stage 2 costs will be incurred whether the component is produced in-house or purchased from an external supplier. Therefore, what is happening? Therefore, the stage 2 costs are not relevant. Do you agree?
Yes.
Yeah.
Yes. So I'm doing this to explain to you because I'm teaching you. I'm doing this to explain to you in the exam, so you don't need to explain. But because I'm teaching, I'm doing it to explain to you so that you understand the solution that has been provided. So the stage 2 costs. Hey, this now started again. Please write it. Let me close it and open another board. It's misbehaving. Have you written that?
Yes.
Yes.
Okay. I just don't know what is happening. Vicious. Okay. So if stage 2 costs are not relevant, it means that we will make the decision solely on stage 1. Is that right?
Yeah.
Okay. So let's look at stage 1 costs. If we should calculate the relevant cost of making, now looking at the stage 1 cost, if we make, what will be the relevant costs? We will incur direct material, right?
Yes.
Yes.
How much is the direct material?
82,800.
82,800.
82,800. We will incur direct labor of how much? 110, 400.
400.
Then we incur variable overhead. Remember, these are all variable costs. Variable overhead, 55, 200.
200.
But then the other overhead, the question told us here in note 2 that the other overhead cost, it comprising fixed and variable overhead, and it's allocated as 36,800 plus 10% of direct labor cost. Can you see?
Yes.
What it means is that the other overhead cost contains a variable portion. So that variable portion must be relevant. Is that clear?
Yes.
Yes.
And they said it is 36,000 plus 10% of direct labor cost, meaning the 36,000 is fixed and the 10% of direct labor cost is the variable part. Is that clear?
Sir.
So check it, you check it and see. Look at the overhead cost, 47,840. Calculate 36,800 plus 10% of the labor cost and see. Our labor cost is 110,400. If you take 10% of that, it will be 11040 plus the 36,000. 36,800. Do you see it's giving you the 47,840?
Yes.
Yes.
Good. So
Sir,
we'll take the variable over other overhead. Yes.
please explain that portion for me.
Look at the other overhead costs. They are telling you that it consists of 36,000 fixed and then a 10% of direct labor cost. So I'm saying that take the other overhead cost here, the 47,840. Check if it is comprising of 36,800 and 10% of direct labor cost. What is the direct labor cost here? Is it not 110,400?
Yes.
Yes.
So when you take 36,000 plus 10% of that figure, 10% of the 110,400, what is it giving you? Is it not giving you the 47,840?
Yes.
Good. What it means that this one is the fixed part. This part, the 36,000 is the fixed part. And then this part is the variable part. Is that clear?
Yes.
Yes.
So we are taking the variable part of the other overhead, which is 10% of 110,400, which will give us what? 11040. So when we add them, yes, what will be the relevant cost of making? Who is adding for us? Let's be smart today because of the nature of our technical problem. We have to be smart.
259,440.
259,440. Please be writing alongside so that you won't miss anything. 259,440. So this is the relevant cost of making. Let's go and also calculate relevant cost of buying. Are we okay?
Yes.
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 Let's also go and calculate relevant cost of buying. So let's see relevant cost of buying. From the footnote, they said if we buy, the outside supplier will supply the 50,000 units at a price of 435 per square. So we incur the purchase price, right?
Yes, sir.
Yes.
Okay.
Which is 50,000 units at the 4 cities, 35 per square. What would that give you?
21,750. So 217500.
2175
Zero,
00.
zero.
Then it says that the company will have to pay freight. If we buy, we will have to pay freight of 10,000. So the freight cost is relevant, right?
Yes, it's
Yes, sir.
relevant.
Yes,
Yes.
it is.
Transport.
Freight cost of what? 10,000. Did you say 10,000?
10,000.
10,000.
10,000. Then it says that if the components are purchased, it will release space for performing stage 1. And the opportunity cost of that space is 20,000. Meaning that if we buy the component from the external supplier, then we wouldn't be using our space for stage 1. So we can even rent out that space to somebody and get 20,000. Are you getting the point?
Yes.
So it means that 20,000 must reduce this our cost. Do you agree?
Yes.
Yes.
Good. So opportunity cost of what? Stage 1. Stage 1 space. That's how much?
20,000.
So if we take that out, what will be the relevant cost of buying?
207,500.
7,500.
207,500. So if we are incurring 259. If we buy, we are incurring 207,500. So there is a certain cost saving. Is that clear?
Yes.
Yes.
Let's find the cost saving. So yes, the cost saving.
51940.
51940.
What is the cost of making?
259,440.
259,440. And what's the cost of buying?
207,500.
500.
207,500. So the difference is what?
51,940.
51,940. And so what will be our conclusion? What should the decision be?
Should buy.
The company should buy.
Yes.
So the company should buy the components. From the external supplier. In order to save what? 51,940 cedis. Is that clear?
Yes.
So we have concluded that they must buy from the external supplier. I'm saying that. So if we should buy, what will be some of the qualitative issues we must consider? Yes. What will be some of the qualitative issues we should consider?
Regular
The price of buying.
So the following qualitative issues should also be considered. Yes, now we've concluded we must buy. But if we are buying, what are the other things we'll look at? Yes, first we
Reliability of the supply.
concern for what? Quality. Are you getting it?
Yeah.
Whether you will be
Yes.
able to produce it for us at the quality we want. We will also look at what? The reliability of the external supplier. Is it that at the
Yeah.
time we need the thing, he will surprise us and tell us that his machine broke down, so he couldn't produce? How reliable is he? Then number 3, what else can we think about?
Confidentiality.
Ability to deliver on time. Are you getting it? Are you getting it? On time product delivery. Do you get it?
Yes, sir.
Yes.
Yes. Other
Yes.
ones will be the nature of the branding. Since he is producing for us, is he branding it by himself or he will use our company's brand? Are you getting it?
Yeah.
Yes.
So nature of the branding of the equipment. Yes.
So,
Mm-hmm.
with the nature of branding,
Yes.
he's manufacturing the thing, and we are picking it, and also it will also go to another process in our hands
Exactly.
before we can sell or whatever. But the nature of branding will that point be very necessary like that?
Okay. Were you part of the lesson on Tuesday?
So I was part.
Good. So what we are saying is that here they are telling you that they buy the equipment which they finally assemble into their main product. So what we are saying is that are the people going to brand it using their company's name, or they are going to brand it using our company's name? If they are going to brand it using their company's name and we are going to put it in our product, it will have an effect on our business. You get the point?
Yes.
That's what we are talking about. So that we wouldn't have a situation whereby we have a calculator. The calculator is for Samsung, but the battery in it is for another company. Are you getting the point?
Yes,
It
sir.
it creates
Yes.
negative
Yes. Yes.
in the mind of customers. That's what we are talking about. So you suggest about 3 of this is okay, and then we move. Are we okay?
Yeah.
Yes, please.
Great, great. I believe you are
Okay.
writing.
Yes.
Yes, we are.
Yes, technological challenges. So as we go, let's advise ourselves. Let's be writing. Can we move on?
Oh,
Yeah.
can you
Yes, sir.
slow it down? I want to take a shot, please, if possible.
Okay. See, this thing has started. I think the board has corrupted. So the listing, please let's maintain it that way so that I can close the board and bring another one. Is that clear?
Okay.
We are having technological challenges, so let's apply this thing and then manage it. All right. So let's see ICA May 2013. It says Dulo Limited produces component A for sale at 47 cedis per unit to a manufacturer of computers. And then the company currently produces 15,000 units of the product. The company currently produces 15,000 units of the product. And then they've given us the production cost. They are telling us that a supplier in a foreign jurisdiction has offered to supply the 15,000 units of the components. Then we are told per annum at a price of 39 cedis. Then it's saying that over a 4-year period, without changes in price, If Dulo Limited accepts the offer, this will be the effect on current operation. Direct labor will be redundant, but will pay redundancy cost of 5,000. Direct materials and variable production costs will be avoidable. And then fixed manufacturing costs will be reduced by 18,750. Share of non-production costs will remain the same. They are saying that assuming further that the extra capacity for accepting the contract from the supplier can be used to produce and sell 15,000 units. Please, a minute, please. Assuming further that the extra capacity for accepting the contract offer from the supplier will lead to the following. They said the materials for component A will not be needed, but additional material cost of 15 per unit will be required. The requirement says, should Dulo make or buy component A? So make or buy component A, yes, let's quickly calculate the make or buy decision. So component A, if we should make, let's look at the relevant cost of making. Let's look at the relevant cost of making. Yeah, so relevant cost of making. So what costs do you think we incur if we make the product? What are the relevant costs we incur?
Well, the direct materials.
Yes, the direct material, the unit cost is what?
14. Why?
How many components is the person? So 15,000 components, right?
Yes.
Yeah.
So direct material, then you calculate. Please work alongside me. I want you to be involved in the working. So direct material, we have 15,000 units at what? What's the price?
14.
14 cedis.
14.
What is it giving us?
210.
210.
Yes. Direct labor, 12 cedis. So direct labor, that will also be 15,000 units at 12 cedis. What would that give us?
180.
180.
180,000. What about variable overhead? Variable overhead. How much is it?
15,000 at 2 cedis.
At 2 cedis.
This is
30,000, right?
Yes, please.
yeah.
Yes.
Now, the question when the fixed manufacturing overhead, they said what? Yes, Dulo Limited, if it accepts the offer, this is what will happen. Now, if we accept to buy it from the person, fixed manufacturing cost will be what? Reduced. So the cost of making in total becomes what? Then let's look at the cost of buying. What are we getting?
420,000.
Total cost of making is 420,000.
Yes.
Now let's look at the relevant cost of buying. Relevant cost of buying. Yes, if we buy, yes, what will happen? They said direct labor will be redundant. But a redundancy cost of what? 5,000 will be incurred. It means we incur redundancy cost. Is that clear?
Yes.
Of how much? 5,000.
Yes.
Yes.
It also said what? The direct materials and variable production costs will be what?
Avoidable.
Avoidable. Yes. Fixed manufacturing costs will reduce by what?
18,750.
18.75.
Yes, it's relevant to us. It will reduce our cost, right?
Yes.
Yes.
So reduction in fixed cost, like a specific fixed cost, which is negative. How much is it?
18,750.
Then they told us that we'll purchase it at what? The person will supply it to us at a price of what? 39, eh?
Yes.
So the purchase price, 15,000 units at 39. Calculate for us.
585,000.
So 15,000 units at 39 cities, giving us 500 and what?
85,000.
Great. So what total cost are we incurring to buy?
608,750.
Are you sure?
571,250.
571,250.
Yes, I need to do
Okay,
that.
so let's get the cost saving between the two options. Let's get the cost saving between the two options. Yes. Cost of making. What is the
Hello,
cost
sir.
of? Yes.
Please, can you scroll down the question? It seems there is a, I don't know if the opportunity cost, because they said if
Yes.
assuming further the extra capacity for accepting the contract.
So
Okay.
that is a second question. It says I say should Dulo accept the offer and use the
Okay.
available manufacturer Z. So that is a new condition they are bringing in.
Okay.
So that is an I part of a question. So let's deal with the I first. Yes, cost of buying is
250.
Against cost of making of how much?
420,000.
571,250.
420,000.
Yes.
So what's the cost saving here?
151.
250.
151.
250.
250.
So what would be the decision at that point?
We should make.
Yes, the company should make component A in-house in order to save, yes, I'm at 151, 250, right?
Yeah.
Okay, so we are making that. Then it went further. It says, assuming further that the extra capacity for accepting the offer from the supplier can be used to produce and sell 15,000 units of component Z at a price of 43 cedis. So we can use the space to produce component Z at a price of 43 cedis per unit. But the following assumptions will be considered. One, all of the labor force required to manufacture component A will be used to make components what? Z. Then is our variable manufacturing cost will be the same, non-manufacturing overhead will be the same. The materials for component A will not be needed, but additional material cost of what? 15 per unit will be what? Required. Okay, so the requirement says, should Dulo accept the offer and use the available space to manufacture Z? Now let's see. So the question is telling us that should we consider this? It says that all of the labor force used to make A will be used to make what? Z. What is the direct labor for making A? 12, right?
Yes.
12. So the 12 will be there. Apart from that, it's saying that variable manufacturing cost will be the same. What is the variable manufacturing cost? 2. So it will also remain 2. Then it says what?
Non-manufacturing.
Non-manufacturing overhead will also be the same. What is the non-manufacturing overhead? Okay, that's a fixed overhead, right?
Yes.
Share of production overhead, then fixed overhead. Okay, it will also be the same. Then it went further and said,
materials.
Yes, we will not use the material, but we incur extra material cost of what? 15, right?
Yes.
And so let's compare. So in II, this is what they are saying is that there is an option. Let's say, let's analyze the details here. let's look at, should we make A? Should we make A? What will be the situation? And then should we also buy A? What will be the situation? And then make Z. We want to compare whether we should buy A and make Z or make A and make Z. Let's see what will happen. Now, what is the selling price for each? What is the selling price for each product? What's the selling price for each product? Yes.
14 when we are making.
No, the selling price. The selling price.
Is it 47 unit or?
For components,
The selling price.
it's 47 per unit.
47. It means that should we make, we'll sell it at 47. If we buy two, we'll still sell it at 47. Are you getting it?
Yes, please.
But then if we make Z, they said the Z will be sold at what?
15.
Look at it. They said the Z will be sold at what?
43.
43.
43.
Good. Now, what will be the relevant cost? Yes, the variable cost. Now, A, if we are making A, what will be the relevant cost we are incurring? Add all for me, material, labor, and then that variable overhead. That's 20. So let me see. Material, labor, variable overheads. If we make A, mention them for me. Yes.
14.
12 and what?
Materials.
14, 12 and what?
2.
Now, if we buy A, the only relevant cost we incur is the purchase cost. Is that not it?
Yes.
Yes.
And then the purchase cost, we are buying it at what? 39. The person said we'll supply it to us as what? 39, right?
Yes.
39. But then if we make Z, we'll still sell at 43. What will be the cost we incur? They told us something here. That for Z, what will happen?
The material will be 15 cedis.
For Z, they said, assuming further that the extra capacity will be used to produce 15,000, they said we will not use the material for A, but we will incur extra material cost of what? 15. So the additional material cost is relevant. Is that not it?
Yes.
So that's 15. Apart from that, they said all of the labor force to manufacture A will be used to make Z. So what's the labor for A? That's 12, right?
12. Yes.
We incur all that 12. Then apart from that, they said variable production overhead will also be the same. That is also what, 2, right?
Yes.
So what will be the relevant cost per unit? Some odd is this 28. This is 39. And this is what? 29, right? So, yes, what is the contribution?
19 for A.
For A is what? 19.
Yes.
And then for B, 8. And then for C, 40, right?
Yes.
Right? Now, so if we make A and then we use the available space, if we buy A and we use the available space to make Z, it means that if we buy A, we are getting contribution of what? 8. And then we make Z, 8 plus 14 will give us what? 22. But if we make A, we will get contribution of 19. Can you see?
Yes.
So which one will be better?
Buy A and make Z.
So what? The options are these. These are the options. It seems some are not understanding what is good. These are the options. They are saying that if we buy A and make Z, if we buy A and then we make Z, it means that the total contribution will be what? Total contribution.
The contribution of
what?
8
plus what?
8 plus 14.
22, right?
22, yeah.
And then if we make A, we'll get only what?
19.
then make A, we'll get total contribution of what?
19.
Total contribution of 19. So the one that you buy the A and use the space to make a certain Z, which will give you a total contribution of 22. And then the one that you make A and you won't be able to do anything with Z and you will get 19. Which one is better?
22. Make A and make Z.
Good. So here the decision should be that first, the company should buy A. So buy A from the external supplier and make Z. Yes, to generate a total contribution of what?
22. 22.
To generate a total contribution of what?
22.
Cities. Yes. Then we say producing A in-house will only generate a contribution of what? 19. Are you getting it?
Yeah.
To explain further to you, producing A in-house will generate contribution of only 19 cities. Please, do we understand?
Yes, please.
Yes.
Let me calm down and then explain further to you. Let me calm down and explain further. Now look at this side of the question. Everybody pause and look. The question is saying that you should assume further that the extra capacity for accepting the contract from the supplier can be used to produce and sell 15,000 units of what? Component Z. So what I mean is that they are now telling you that we are assuming that you've decided to buy from the external supplier. Are you listening?
Yes.
Yeah.
So if you are buying from the external supplier, then they are telling you that the space that you use to make A, that space can be used to make another component Z. And these are the details of producing Z. Are you getting the point? So the question is telling you that should you accept the offer and use the available space to manufacture Z, it means that now there are two options. It's either you make A alone and sell, or you buy A from the external supplier, then the space using to make A, you use it to make what? Z. That means that your capacity is that either you make A and nothing else, or you buy A and make Z. Are you getting the point?
Yes.
So you are going to compare that if I should make A, this will be the situation. I'll sell it at 47 and I will incur this relevant cost, giving me contribution per unit of what? 28. If I should buy A, I will still sell it at 47, but then the only cost I will incur is the purchase cost. Are you getting the point?
Yeah.
So I'll end up getting contribution per unit of what? 8. So now that I'm buying A, it means it is possible for me to produce Z. And should I produce Z, I'll sell it at 43. These are the costs I'll be incurring. They are telling you that we will not incur any material cost, but there will be an additional material cost of 15. The additional one will be relevant. The labor will still be there, 12 cities. The variable overhead will still be there, 2 cities, giving us 29. So we'll get a contribution of what? 14. And I'm saying that, so if what it means is that if you decide that you are going to buy A and make Z, then from buying A, you get benefit of 8 plus the 14 you will get from making Z, making it 8 plus 14, that is 22. Are we getting it now?
Yeah.
And then if you make A alone, you will get 19. So if you are the one, as a wise businessman, will you prefer to buy the A and use the space to make Z so that you get total benefit of 22, or you make A and get only 19? Obviously, you would like to buy and make Z so that you get total contribution of 22. Is that right?
Yes.
This is per unit. These contributions are per unit. So this is the decision. So I'm saying that the decision should be that we should rather buy A from the external supplier and then make Z to generate a contribution, let me say per unit, contribution per unit of 22. Producing A in-house will only generate a contribution of only 19 cedis per unit, right? Do you get the point?
Yeah.
So if you want to find it in total terms, you can just multiply it by the 15,000. You can just multiply the 22,000 by the 15,000, and then the 19,200 by the 15,000. Are you getting the point?
Yes, sir.
I think you understand now.
Yes.
That's great.
So the question is cool. Just that you need a lot of comprehensive understanding. Then you'll be fine.
Exactly. Okay. So those of you.
Hello, sir.
Okay. Yes.
Now, buying component A, there will be a redundancy cost. So with the
No. The buying component A, the situation you are referring to is given. We are only referring to the given situation here. No more. We are no more talking about IRs. We are only looking at the information provided here. Are you getting it? They are telling you should assume further. That means that the assumption you are making, you are dwelling on only this assumption. Are you getting the point?
Yes.
Oh, my brother, you are not minding.
Oh, yeah, yes, sir. I'm okay.
You are okay now. The question is saying you should assume further. So once it's saying you should assume further, all the assumption is based on only this assumption. Are you getting it? All the calculations based on this assumption. Do you understand?
Yes, please.
Yeah.
The I, you finished it and it's giving you a further assumption. Okay. So let's look at Wobube Limited. It says Wobube Limited makes component WXYZ, for which costs in the forthcoming year are expected to be as follows. You have production cost, then the variable cost per unit, you have direct material, direct labor, variable overhead, and blah, blah, blah. Then the question is saying that direct attributable cost per annum and committed cost. We have incurred as a direct consequence of making W is there, making X is there, making Y is there. Then we have other fixed costs. So the total fixed cost per annum is 50,000. The question is telling that a supplier in a foreign jurisdiction has offered to supply components of W, X, Y, and Z at the following prices. The question is saying that should Wobube Limited buy or make the component? Yes. So make or buy. Again, what are you going to do? We are going to calculate relevant cost of making again against relevant cost of what? Buying. Are you getting it?
Right.
So because there are many products, it will be good to calculate it in per unit first. Now, if we should make, what will be the cost for W? Then you add all the material, direct material, direct labor, and variable overheads, giving you what? 14. It is even there.
14.
So let's move on. So a very easy question. A very easy question. Yes, I would like you to move alongside me. Very easy question. Very easy question. Question 3. Wobube Limited. Okay. Now, should we find the relevant cost of making? Let's put all the products here. W, X, Y, and then what? Z. Yes. Relevant cost of making. Yeah, so relevant cost of making, W, everything is what? 14. It has been given already, right?
Yes.
X, 17. Y is what? 7. And then Z is what? 12. These are the cost of making. Let's look at the relevant cost of buying. Relevant cost of buying. Now, if we buy, we only incur the selling price, and then they've given us here. They said the person will supply to us at 12 and what?
12, 21, 10, 14.
114.
12, 21, 10, and what? 14, right?
14.
Because there are many products, that's why I'm doing this. So, should I compare? Let's look at the cost saving. Should I compare? What is going to happen? For W, if we are making 14, and then if we buy 12, so what is going to happen?
For
For W, we save 2, right?
Yes, sir.
For X,
Save.
if we incur 17. If we buy, we incur 21. So we lose what?
3.
4.
4, right?
Yes.
For Z, we incur 7, we buy 10. We will lose what, 3, right?
3.
And then for this one, what will happen?
We lose 2.
We'll lose 2. Okay. So that's positive 2, eh? Okay, negative. It's fine. Yes. But then, how many units are we producing?
For W,
W
1,000.
1,000, 2,000, 4,000.
A moment.
1,000.
Yes. How many units are we producing? The units we require.
For W 1,000.
1,000 for W.
1,000 for X.
2,000.
For X, 2,000. What about Y?
4,000.
And then for Z,
3,000.
3,000. So let's get that in total. So let's get that in total and see. So this is per unit. So this is 2,000, eh?
1,000. Yes. That's 4,000.
And this is what?
That's 12,000.
And this is what?
That's 6,000.
6,000.
Good. So that is the.
Those one will be 8,000 or 4 by 2.
X will be 8,000.
Which one is 8,000?
The second one.
X.
Oh, this one.
Yes.
Let's calculate. It's giving us what, 2,000, right?
Yeah.
8,000.
8,000.
12,000.
12,000. What?
6,000.
6,000.
Good. Now, so this is the difference in cost. But then they are telling us that we would also incur some specific fixed costs. So there is a specific fixed cost here. If we produce W directly, we incur cost of what? 1,000, right?
1,000. Yes.
Yes. So here, now the point is that analyze this part well. You see, if we make or we buy, here, the cost saving we are getting here is in favor of what? Making, right?
Yes.
So if we make, we incur extra cost of 2,000. Can you see? Can you see from the board?
Yes.
If we make, we are incurring extra cost of, so it's like a cost saving or extra cost. Because I've made it positive and negative, you should understand. It means that for W, if we make, we incur extra cost of 2,000. And then there is a specific fixed cost there. So let me say specific fixed cost. So for W, since we are incurring 2,000, an extra 1,000 will add to it. Is that clear?
Yeah.
Yes.
Now for X, we are rather saving 8,000. Are you getting the point? Are you getting the point?
No,
Yes.
sir.
Saving.
Oh, someone says no. Who says no? Come
Yeah,
and let me.
because I'm looking at when we bake, the relevant cost is 14 cedis.
Yes.
But we are going to buy, the relevant cost is 12. We are saving 2 cedis.
No, I'm calculating it on the basis of making. But the company is for me. So I'm looking at on the basis of making is the ideal thing. The buying is an option. So what I mean is that if I make, I incur 14. If I buy, I incur 12. That means that as a result of making, I'll be incurring an extra 2,000. Therefore, if I have an extra cost of making 1,000, I'll rather add it to it. Are you getting the point?
Yes.
The cost that has been given to us here is for making. So we have to do our analysis on the basis of making. Are you getting the point?
Okay.
Yes.
You understand?
Yes.
Good. So extra cost of 1,000. Now for X, we are rather saving 8,000. The 8,000 is a saving to us. Therefore, if we are incurring an additional cost of 5,000, then what will it do? It will reduce it. Are you getting it?
Yes.
And then for Y2, we have what? What's the
8,000.
cost of making Y? 8,000.
8,000.
They didn't give us anything for Z, right?
Yes.
Yes.
Okay. WXY. Okay. So should we sum them? What is going to happen?
There's 3,000.
So this one will incur 3,000. This one will
There's
see
3,000.
3,000.
this one to
4,000.
4,000.
There's still 6,000.
6,000. So they said, should we make or buy the component? So what will be our decision? So what will be our decision for all of them? Here, there are many components, so you need to be careful. So this one, are we making or we are buying?
Yeah,
We are
but
Bye-bye.
This one we are buying.
Yes.
This one, are we making or we are buying?
We are making.
We are making. Once they say we.
They are making this.
that's where my problem. I'm not getting the concept from the previous examples we saw. If
Okay, wait.
if you have to make this decision here,
Don't worry, I'm coming. I'm
okay.
coming. Since you don't understand, let me go this way. I'm trying, because there are a lot of products. I'm trying to go simple, but since you don't understand, let me open it, and then you will now understand that it's the same thing. Let me tackle it this way. Please allow him. Those who will be in a hurry, allow him. It's 50 marks is for here alone.
Sure.
So allow him.
Sharp.
So let me say W, X, Y. Maybe if I do this, you would rather even say, maybe you prefer this. W, X, Y, and Z. So here I'm looking at relevant cost of. Please what? I'm looking at relevant cost of anything here. Now, if I make, let's go up there. If I make for W, I'll get variable cost per unit of what? 14, right? 17, 7 and what? 12. Agreed?
Yes.
Then I'll multiply this by the number of units. If I multiply it by the number of units, how many units for W? 1,000,
Yes.
2,000, 4,000, and then what?
3,000.
3,000. So what will be the total variable cost? What will be the total variable cost? 14,000. Then this will give us what? 34,
Yes,
Hey, my
please.
brother, the one who said he doesn't understand, you have to help me.
Okay.
28,000.
36.
38,000.
You're giving me work and you've left it for me.
36,000.
Is it human beings?
Oh, I'm there, sir.
He said, come and help him do something. Now he has left the whole work for you. So that's variable cost. But then, should we make it, we'll be incurring some specific fixed costs. Can you see it here?
Yes.
Yes.
So it means that there is a specific fixed cost. Mention all for me, 1,000 and what?
5,000.
8,000.
8,000.
There is no specific fixed cost for Z, right?
Yeah.
Yes.
The relevant cost of making the total will be what?
15,000.
15,000. This is what?
30,000.
Then for 36.
And this is what?
36.
36. So this is the relevant cost of buying, right?
Yes.
Now let's look at relevant cost of making. Let's look at relevant cost of buying. Relevant cost of buying. And I'm saying that if we buy, the only thing we incur is the purchase cost, right?
Yes.
And they gave us purchase cost. They said the person will sell it to us at what? 12.21. Mention it for me. 12.
21.
14.
10 and 14.
10 and what? 14.
14.
So this is what we incur per unit. Then that one to multiply by the number of units.
1,000.
1,000. And then what?
2,000.
2,000.
2,000. And then what?
4,000.
And then
3,000.
2,000.
3,000. So what will be the total for that one too?
12,000.
12,000.
42,000.
1,000.
40, yeah?
40,000.
And then what? 42 or?
Yeah, 42.
42,000. So my
Yes.
brother, what we are doing now to make our decision, we are comparing. We are comparing. Look at X. You see, X, if you make, you incur 15,000. If you buy, you incur 12,000. So let's say, let me call it
Cost saving.
extra cost or cost saving. Extra cost or cost saving. Now here, are you incurring extra cost or you are saving cost?
That's saving.
Oh, W, you are saving cost.
So 3,000. This one will be what? 3,000 negative, right?
Yes.
Now we what? 4,000
4,000. Yes, please.
negative. What about this?
6,000.
6,000 negative. So I'm saying that depending on how you understand this, your cost saving, what it means is that the decision should be that for X, are you making or you are buying? For X, are you making or you are buying?
I'll buy.
You buy. Very good. Buy. What about Y?
Because
How
the in is lesser. So
Late. Okay.
right? For Z, what will you do?
I'll make.
You will make, right?
Yes.
And then for Z, what will you do?
Because the cost is lesser, I'll make.
You will make. Good. So this is your decision. And I'm saying that it's the same as what we did here because all of them, they are in per unit. I took them in per unit form. So find the difference. I took them in per unit form. Then I found the difference. So once I found the difference, I'll know which ones are more and which ones are less. Then I multiply by the number of units to get it in total. Then I add the specific fixed cost to it. So at the end of the day, the 3,000, 3,000, 4,000, 6,000, it's not the same as what you have here. It's not the same as what you have here. 3,000, 3,000, 4,000, 6,000. Can you see?
Yes.
Can you see now?
Yes.
Yes.
Okay. Because I think under exams control, there are two methods. Under exams condition, multiplying and coming back to multiply. Look at this. You multiply this by the number of units. Look at this. They will not give you ticks for the same thing, repetition of the same thing. See, we multiply this by 1,000, and we came here to multiply by 1,000, and then we found the difference. Is it not the same as finding the difference at once and multiply by the units?
Yes.
Hello, my people.
Yes.
Yeah.
This.
Instead of multiplying by the units and getting it in total before adding the specific cost, and then you come and subtract, is it not the same as subtracting it in per unit first before you multiply by the number of units to get the total?
Yeah.
Yes,
Yes.
so you still get this extra cost or cost saving, the same thing here, and then the decision is the same. Is that clear?
Yes.
Yeah.
So that's the decision. In fact, this question, look at something. I want to draw your attention to something. You see this question on Wubube. Can you all see this question on Wubube?
Yes.
Yeah.
Look at the way they ask this question. I'm going to jump some of the questions and go to May 2020. It's the same question. So you see, but these are very, very old time past. Long of them are, some of them are 98 and the rest. In fact, Prof has a software that has all the old passwords, the very, very old passwords, some 99, some 2000, 2001, and the rest. These are the questions that ICA is now taking them, changing the names and refining for you. Are you getting the point?
Yes.
And those questions, unfortunately, they are off the website. Those questions are not on the website. So because they are not on the website, students are not taking note of it. But thank God, Prof has these questions. I mean, he has these questions in the software. So that is what he has given to me, and then I've extracted these long time past questions from it. Look at what happened in May 2021. let's go down to the question in May 2021. May 20, let's go down and scroll. Yes, Agro Limited, question 4. Can you see this question?
Yes, sir.
Yes.
Okay.
It says Agro Limited is a community company that manufactures and sells car components, wiper, driving mirror, and brake pad. And then it said the budgeted information for the next year is as follows. They've given us for wiper, driving mirror, and brake pad. And it says direct labor is paid at 12 cedis, while other production factors are unlimited. Labor is limited to 102,500. Hence, an extra component will be purchased from the supplier. And they are saying that total fixed cost is expected to be as follows. Now, the question said, an external supplier has offered to supply a unit of the thing at the following prices. Now, it says you should advise which of the products it should make and which of the products it should buy in-house. Is it not the same question?
Yes.
Yes.
And they've given you specific fixed cost here. Can't you see?
Yeah.
Can't you see that the examiner picked an old past question and just changed it and modified it for?
Yeah.
So you can see the same thing you are seeing here. You can calculate it in per unit form, find the difference, and then add the specific fixed cost. Then it now says that you should advise whether you should make or buy. So you see which ones you should make and which ones you should buy. Then when you finish, it says you should recommend the quantities that Agro should make and the quantities that you should buy externally in order to obtain the required quantities of all the parts. Now, if you want to know which products you should produce, like which of the decision-making techniques teaches you which products will be the best to produce? I explained all the decision-making techniques to you. Which technique shows you which products you should concentrate on and produce?
Limiting.
Limiting factor. Are you getting the point?
Yes, limiting.
So because you understand its limiting factor, what it simply means is that in that particular year, the 20 marks the examiner brought, all that he did was to give you a make or buy of 7. Then out of that make or buy, use limiting factor to decide which ones you should produce, 10 marks, making 17. Then they ask some small theory questions, state 3 factors to consider before setting the selling price of a product. Fala, 3 marks, 20 marks. And I keep on telling students, so assuming you go to exams hall and you have such a question for 20 marks, what kind of blessing again can God give you in this world? You are looking for 50 to pass, and you have such a question for 20 good marks. Is there any blessing God can give you in this world again? You have to capitalize on that and pass the paper. Let's solve that question. Please, are we okay with the previous ones? Are we taking the previous ones?
Yes,
Yes.
please.
Okay, so let's solve this. So as we are solving, be taking note of them because we'll come back if our next meeting will continue from where we ended. Because this question looks similar, I want us to tackle it so that the understanding will be clear. Is that clear?
Yeah.
Yeah.
Now look at ICA, May 2021. So let me put that here. ICAG, May 2021. Yes, Agro Limited. So I should have added the question number so that you can refer. Anyway, let's go. Yes, so it manufactures and sells car components, wiper, driving mirror, and brake pad. And they said the budgeted information for the next year is as follows. Direct labor is paid at 12 cedis, while other production factors are unlimited. Labor is limited to what? 102,500. That alone should tell you there is a limiting factor. Hence, an extra component must be purchased. Blah, 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 blah. The question says we should advise whether Agro Limited should make the product in-house or outsource. So let's look at relevant cost of making against buying. Let's look at the product. They are what? Wiper.
Wiper. Driving mirror.
Wiper. Driving mirror.
Brake pads.
And then what? Brake pad, eh?
Brake pad, yeah.
So find relevant cost of making.
The right materials.
Relevant cost of making. Please mention them for me. Direct material.
9.
Please don't leave the work for one person. If he mentions a wrong figure, we are doomed. Direct material. 9, 10,
10, 5.
then direct labor,
18.
18, 3 and 12.
18, 3 and 12. Hey,
Oh.
let me go back to the routine thing. Some people are quiet. It seems they are sleeping. Let me make the roll call quickly. Let me quickly make the roll call. Hey, I've seen them. A lot of them, they are sleeping. Those who are, yes. So let me see. Yao, Abdul Kudus, Angela Entry, hey, my own Angela Entry, then Clement, Emmanuel Asari, Emmanuel Pong, iPhone, Gifty, Galazere, Joshua, Mary, and the rest. Please put on your mic. We want to hear you. Somebody, Yvonne. What? Ampati or what?
He's very good.
Patrick Alman, Michael, Mary, McCaffrey, and the rest.
Hey, me, I'm no awful.
We want to hear your voice. Contribute to the lesson.
I'm contributing.
Caroline, Enoch, Galazi. Put on your mics and contribute. Don't just be observing. Don't be a spectator. Okay, so direct labor. Yes, are there any more?
Variable product. No.
The variable production overhead.
Production overhead, yes.
Variable overhead. How much are those?
1, 2, 1.
1, 2, 1. Okay, so when we add all this will give us the variable cost per unit.
Yes. So
18, 15, and what?
10, 18.
Am I right?
No.
Yes, sir.
No, the first one.
First one is 20.
The first one.
28.
28.
Yeah, I don't know how I passed the IC, but whatever be the case, I passed. It's left with so times the number of units. So give me the number of units.
50,000.
25, 35.
25,000. 35,000.
35,000. Okay, so start multiplying them for me. Please multiply them.
The first one is
1.4 million.
1.4 million.
Okay.
Second one is 375,000.
375.
The last one is 630.
630. Yeah, so this will be the total variable cost, eh? But I think there are some specific fixed costs. There are some specific fixed costs, right?
Yes.
Yes.
So give me the specific fixed cost for all of them.
For wiper, 140,000.
140,000.
255,000.
255,000.
255.
150,000.
150. So this can give me my total relevant cost of what? Making it. I believe you're understanding it.
Yes, please.
Yeah.
You're understanding it. It's not difficult at all. Decision making there, you just have to know your strategies. So please give me the total.
1264. Sorry.
What about this?
630.
I didn't blow the this one was 630.
Yes.
So this is relevant cost of making. Now let's look at relevant cost of buying. Relevant cost of buying. Now, if we buy, we incur the purchase price, right?
Yes.
Yes.
And is that the person who sell it to us at what? 32, something.
12.
24, 23.
32. Now what? 24.
24, 23.
and 23. Is there any other cost we incur? No, right?
Yeah.
Then,
Bishop, please, the first one.
yes.
Is it the wiper? The total cost. The
Total
variable cost and the specific fixed cost.
for which one? For which one?
I think that's the wiper.
This one?
Is it the wiper? Yes.
1,400,000 plus 140,000 is 1,000,000.
Yes. That's correct.
It's correct. Madam, are you okay?
Yeah. I think I did 14 million.
Your
Okay,
calculator
I
gives
guess
you the
it's.
different figure.
No, I think I did 14 million. That's
Okay.
I guess
So let's
it's.
be careful. Some of these things, the zeros, let's be careful. Normally, in the exam, so it's not our fault too. When there is tension in the exam, so like that, when you open question 1, you can't solve. Question 2, you can't solve.
Yeah,
And
good.
when you open the paper, you can't solve question 1, you can't solve question 2. Then the question 3 that you can solve, then pressure will let you be increasing your zeros.
To increase the mass.
So that's just
Pressure.
by the well. So we also have to multiply by the number of units, eh?
Yes. So 50,000.
What's the number of units? 50,000, eh?
Yes.
Yes, 25,000.
So 50,000. This was 25.
Yes.
35.
85.
35.
Yes.
Yes.
1.6.
1.6.
1,600,000.
1,600,000.
Yes.
Yes.
600,000.
600,000.
600,000.
805.
80.
605,000.
Okay, so let's take our decision. I think the cost saving right now confuses people more. Are we making this or we are buying?
I'm making.
You're making.
Are we making this or we are buying?
We are buying.
Are we making this or we are buying?
I'm making.
Yeah, making.
We are making, right?
Yes.
Hey, please, you write too, so that I think the board is correct. The moment it starts. Here you say we are making.
Yes, sir.
Yes.
Yes,
Yes,
we are
sir.
making.
Okay, so please write this.
Bishop, please,
Write
can you scroll down small so I get the top?
you see, if I attempt scrolling down, the moment these things are, then the board starts misbehaving.
Oh, okay, that's fine.
So let me dictate for you to write. We started with relevant cost of making. So everybody write it down. We started with relevant cost of making, and then list your wiper, brake, driving mirror, and brake pad. What is the order? What is the order in which they were given?
So that material.
Driving mirror and brake pad. So can I read?
Yes, please.
So direct material, the relevant cost of making direct material 9, 10, and 5. Direct material 9, 10, and 5. Are you okay?
Yes.
Then direct labor. Direct labor is 18, 3, and 12. Direct labor 18, 3, and 12. Are you okay?
Yes, please.
Then variable overhead. Variable overhead is 1, 2, and 1. Are we okay?
Yeah.
So sum all that to give you the variable cost per unit. Sum all that to give you the variable cost per unit. Did I mention them?
Yes.
The first one gives us 28. The second one is 15, 15. And the third one is 18, 18. Are you okay?
Yes, please.
Now multiply by the number of units. So you can continue from here. The number of units is on the board. So times the number of units. 50,000, 25,000, 35,000. And then I will give you the total of variable cost. I'll give you the total of variable cost, which is 1,400,000, 375,000, and 630,000. Are you okay? Hello, are we okay?
Yes,
Yes,
sir.
please.
Then add the specific fixed cost. Add the specific fixed cost of 140, 255, and 150. Then you get the total cost of 1,540,000 for wiper, 630,000 for driving wheel, and 780,000 for brake pad. Are you okay?
Yes.
Then leave a line and come to relevant cost of buying. Leave a line and come to relevant cost of buying. So that will be the purchase price, 32,24,23. 32,24,23. And multiply by the number of units. And multiply by the number of units. And get the total cost also there.
Yeah.
Are you okay?
Yes, sir.
So now you can make your decision. You can make your decision as to whether you are making or buying. So do that. So can I stop sharing this one and share another one?
Yes, sir.
Yes.
Sir, please, I have a question.
Yes, ask your question.
Yes, it has to do with the shutdown decision making. Please, I want to find out, under such situations, are we looking out for a product or products that are basically generating contribution, or they must necessarily be able to cover the fixed costs before we actually make the decision?
No. The covering of the fixed cost is just to give more explanation to the decision. Are you getting it?
Okay.
We are looking for products that are making contribution, but then you are trying to explain further that that contribution is paying a lot of the company's fixed costs. So should you close it down, it means all those fixed costs must be borne by the company itself. You get it?
Okay, noted, sir.
You know what that means?
Yes, please. Thank you very much.
Are you okay?
I'm okay.
And the network is a bit slow. Okay, can we move on?
Yes.
Can we move on?
Yes.
So
Yes,
let's finish the
please.
question and then we close. So what did the question say? Yes, we've decided which ones we are making, 7 marks. Now it says we should recommend the quantities it should make and the quantities it should buy. Are you getting it?
Yes.
So that
Yes.
aspect of the question is what we call the limiting factor. So this will be an advantage for you to make limiting factor decision. So the B part, let me draw your attention that is limiting factor decision. Now, under limiting factor, what I said is that the first step you have to do is to identify
the limiting factor.
Very good.
The limiting factor.
Okay.
Assess the limiting factor. Now, this is how you do it. If you look at the question, it told you that while other production factors are unlimited, labor is limited to what?
To 1,025,000.
Hey, I want to hear voices. So only one person is talking. Labor is limited to what?
102,500 hours.
102,500 hours. Now, if we have to produce, what will be the requirement? What is the requirement?
Labor hours.
Yeah.
So
18.
For A, I
per
said
unit.
it's wiper, eh?
Yes, sir.
The first product is what? Wiper, eh?
Yes, please.
Yes.
Now take note of this. ICA likes doing this. Wiper. We want the labor hours. They'd rather
Yes.
give us the labor cost of 18.
Cost.
But
Yes.
the question told us that direct labor is paid at 12 cedis. It
Yes.
means 12 cedis per hour times a certain number of hours give us 18. Are you getting it?
Sure.
Yes.
So that will
Yes.
be 18 over 12, eh?
Yes.
Are you getting it?
Yes, sir.
So 18 over 12 hours times how many units are we producing for this?
3,000.
50,000.
Then driving mirror. Driving mirror will also be 18 over 3 over 12, eh? Right?
That's 25,000. Yeah.
Means 3 times a certain number of hours give us this. So 3 over 12 hours times how many units? 25,000, eh?
25,000.
Then brake pad. That was also what? 12 over 12 hours. Also times what?
35,000.
35,000.
Please calculate them for me.
The first one is 75,000.
Please, as for the calculator, I beg you, 2 to 3 people should give us results. Mm-hmm.
The last one is 35,000.
And then the second one. Madam,
6250.
6250.
please do 5. So when we add up, what are we getting? What are we getting?
116,250.
116,250.
When we take it out, what do we have? There's a shortage, eh?
13,750.
There's a shortage, right?
Yes.
13,750. So this tells us that indeed labor hours is limited. Are you getting the point?
Yes.
Yes.
And the next thing you do is you do contribution per unit for all of them. Do contribution per unit for all of them. So let me say wiper, driving mirror, and then brake pad. What is the selling price?
34.
34.
28.
28. Then we take the variable cost per unit out. Look in your make or buy decision. You have the variable cost. We've worked it already in A. In the A part, the variable cost per unit, we summed them already, so there's no need repeating it.
28.
20, 15 and 18.
15 and 18.
15 and what?
18.
18. When we take it out, contribution per unit is what here? 6. 15.
15.
So this is the contribution per unit, but we don't need contribution per unit. We need contribution per the limiting factor. Are you getting it?
Yes.
And the limiting factor is labor hour. So contribution per labor hour. If you want the contribution per labor hour, wiper, driving mirror, and then brake pad, you first take the contribution per unit. Contribution per unit, which is what?
615.
Then you divide it by the labor hours per unit. Is that clear?
Yes, sir.
You see, management accounting is mathematics. So look, it's like this. I have contribution per unit, and then I also have labor hours. I also have labor hours per unit. If I want to find contribution per labor hour, if I want to find contribution per hour, because contribution is beginning, I'll begin with the contribution per unit, and then I'll multiply by the units per hour so that the units can cancel.
Yeah.
It means contribution per hour will give you contribution per unit. Instead of saying times units per labor hour, because it's hours per what unit, then you divide it by that, hours per unit. Are you getting the point?
Yeah.
Yes, sir.
So you divide this by the labor hours, labor hours per unit. So the labor hours for A, we had 18 over 12, right?
Yeah.
Right?
Yes.
For B, we had 3 over 12, right?
Yes.
And for C, we had 12 over 12.
12 over 12.
So do that and give me the contribution per limiting factor. Yes. Yes, please calculate that for us.
First one is 4.
4.
You said the first one is for 4.
Yeah.
Yes.
Okay, so the first one is 4.
The second one is 60.
This was 60.
Yes.
Are you sure?
Last one is
Yeah.
10.
The first one is not 9.
The first one, please calculate it.
9.
It's 9.
Yes.
Madam,
First one is 9.
it looks like your calculator is worrying. Just type 6 divided by and put this into bracket. 18 over 12.
8.
The first one is 4.
The
It's
first
4.
one.
It's 4. It's
Hey,
4.
it's 4.
Not 9.
It's 4.
It's 4.
Hey, please, this
6
problem
divided by 1.5.
4, 4, 4.
I've
It's
been
4.
encountering a lot with students. Please,
4.
if
It's
you are
4.
if you are seeing this here, if you are
5.
seeing this here, whilst we are
It's
The
4.
first one.
The last one is 10. The
Yes.
second is 60.
please hold
60.
on.
The last
60,
one
10.
is 10.
Please hold on. The contribution per unit. Okay. So for 60 and what?
10.
10. 10.
And 10. Are we okay?
Yes, sir.
Yeah.
Please, a minute. A minute, please. So let's come back here. We seem to be in a hurry, so we are not taking. We seem to be in a hurry, so we are not taking note of what we are doing. Now, the limiting factor, we are only using the limiting factor for the products we are producing. The one we are buying, there is no need to apply limiting factor to it. Is that clear?
Yes.
Hello?
Yes, sir.
Yes, sir.
The limiting factor, it seems because we are all in a hurry, we are not taking note of difference. Let's exercise patience and close. By 6:30, we are done. The limiting factor, we are using limiting factor to decide which product we should produce, how many of the product, how many quantities we should produce. So we are only using it for the one we are producing. Do you get it?
And the brake pad.
Wiper and what?
The
Brake
brake
fluid,
pad.
right? Brake pad, right? So,
Brake pad.
so let me correct this. Let me correct this quickly. Let me correct this quickly. So we are only using it for wiper, and then which ones are we making? We are making wiper and what?
Brake pad.
Brake pad.
Brake pad, okay. So give me the selling price for brake pad.
28.
28. And then the variable cost per unit is what?
18.
18.
10.
So this is what, 6, eh?
Yes, and 10.
10.
So then the contribution per labor hour to, let's exercise patience and do the right thing. Okay, so wiper and our brake pad, eh?
Yes.
Yeah.
Contribution per unit is what?
4.
10.
10. So 10 divided by, what's the hours per unit? This is 12 hours.
1.7.
So at the end of the day, this will give
Yep,
us what?
4 and 7.
4,
4. 10.
and this will give us
10,
10.
10.
That's fine. Are we okay?
Yeah.
Yes,
Yes.
please.
Yeah.
Yes,
Okay.
please.
Rank them. Then you rank them according to which one gives you the highest contribution per meeting factor. So should you rank them?
Hello, sir.
Yes.
Then if we are to do it that way, the hours required, will we calculate for driving mirror?
No. The hours required, that is for the whole company. We want to ensure that that resource is limited. Are you getting the point?
No,
Hello?
where we determine the shortage, because we did it for David Mirror and it
No.
gave a shortage of
Understand
30.
this. Understand this. The resource is for the whole company. Are you getting the point?
Yeah.
So we are assuming that if we should use it to produce all the products, there will be a shortage. That is why we need to produce some and leave some. Are you getting it?
Yes.
So you assess it for the whole company to confirm that indeed there is a shortage. So because there is a shortage, you now have to do, what do you call it? You now have to produce and leave some. And then we've already seen the ones we are supposed to produce. Are you getting it? But now we are looking for how many quantities of each one we have to produce. Are you getting the point?
Sure.
Are you okay?
Yes.
Yes. So when we rank them, which one is first and which one is second?
Break pad.
First.
Brake pad.
Wiper is second.
And then the wiper is 16.
So number five, you now prepare your optimum
Optimum
production plan.
production.
Okay, so what is the available hours?
102,500.
I mean, it's a hello. Yes. Yes. So hold on. I'm let you. I'll finish right now and call you. Hold on. Hello. Yes. Let's continue. So available. How much is the available hours? 102 what?
500.
500.
102 500. Now, which one are we producing first?
We are producing
Break
brake pad.
pad. Break pad.
Brake pad. And then to produce brake pad, we need 12 over 12 hours. 12 over 12 hours times how many units? How many units of brake pad in the question?
35,000.
35,000.
35,000. And that will give us what? 35,000, right?
It's 5,000. Yes.
So when we take it out, how many hours will be remaining?
67,500.
67,500. Then now, second, we are going to produce what? Wiper, eh? Now,
Yes.
wiper,
Yes.
we need 18 over 12 hours.
Times the remaining.
Now, my brother, check and see how many units are we supposed to produce?
We need to
50,000.
produce 50,000.
50,000.
When you
50,000
produce
by then.
50,000, you will see that there is a shortage. Can you see?
Yes.
Yeah.
Yes.
So it means that you will use this 67, all the 67,500, you will use all to produce wiper so that it will finish. So you ask yourself that the number of units of wiper you have to produce is 67,500 divided by the hours. Are you getting it?
Yes.
Yes.
Are you understanding it?
Yes. To get there.
Divided by the 18 over 12 hours. Are you okay?
Yes.
Yeah.
Yes.
And I'll give you what?
45.
45,000. 45,000.
45,000.
Yes.
45,000 units. Meaning that it is only 45,000 we can produce here. My brother, do you understand now? Can you see? So once we have seen that, what did the question answer? It said we should recommend the quantities that we should make and the quantities we should buy. So now in answering the question, we can now go and say quantities to make and buy. So let's say recommended. Here they didn't ask us to calculate the profit. So recommended quantities to make and buy. Now the three products are what? Wiper, driving mirror, and what?
Brake pad.
Brake pad. Now, if we are making for wiper, how many units of wiper are we making? 45,000, right?
Yeah, it's 45,000.
Now, driving mirror, how many units are we making?
You know,
Driving
we are
mirror,
buying 600,000.
so we are buying. And then
Yeah.
brake pad, how many are we making?
35,000. 35,000.
35,000.
Yeah.
Good. Then buying. Now, you see the wiper, the budget was 50,000, right? Right?
Yeah.
Yes.
Look at this. The wiper in our question, we need total wiper of 50,000. Therefore, if we are making 45,000, it means we have to buy 5,000. Are you getting it?
Yes.
Yes,
So
sir.
we'll buy 5,000 from the external supplier. 5,000. For driving mirror, we need 25,000. We are buying all the 25,000, right?
Yeah.
Right?
Yes.
Therefore, brake pad, we need 35,000, which we've made more. So this will give us the total budget of 50,000 units for this, 25,000 units for this, and then 35. So we've now met the budget. Are you okay?
Yeah.
Yes.
So this is your answer for A. Where when it says you should recommend the quantities you should make and buy. And then it says hence we should calculate what? The question says hence we should calculate what? The total annual cost, right?
Yes.
Right?
Yes.
Please understand. Hello?
Yes, sir.
Yes, sir. We are with you.
What is going on? Do we understand what is going on?
Yes, sir.
Yes,
Sir.
please.
Yes, plenty.
So the total annual cost. Let's analyze it. Now, for the first one, wiper. Yes, we are making wiper. We'll make how many units? 5,000 units.
Make 50,000.
Now, the 45, we'll make it at the variable cost of production. What's the variable cost of production for wiper? From your solution, the variable cost for wiper is what?
1 million. 1 million.
No, the variable cost per unit.
28.
28.
So we'll make it at 28 cities, right?
Yes.
Then we'll buy 5,000 units. Can you see?
Yes.
We'll buy extra 5,000 units at the purchase price. And then the person said we'll sell it to us at how much?
32.
How much?
32.
The person is selling it to us as 32. So we'll buy it at 32 cities. We'll buy it at 32 cities. Good. Then what about the second one? Wiper. The next one is what? Right? The next one is for driving mirror, right?
Yes.
Okay, so driving mirror, we are not making anything. We are buying all, right?
Yes.
So we are buying 25,000 units at the person's price of what?
24.
At the person's price of what? 24.
24.
Are you okay?
Yes.
Are you okay?
Yes.
Then let's go to brake pad. Let's go to brake pad. Yes, brake pad. We are making how many units are we making?
45,000.
We are making 45,000 units.
No, 35.
35. We are making 35,000 units. At the variable cost of production of how much?
18.
35,000 at 18, eh?
Yes.
Good. So give me the totals. So give me the totals here.
1 million.
1,260,000.
So 1,260,000.
160,000.
160,000.
160,000.
And
What
the
about
next
this?
is 600,000.
600,000.
600,000. What about this?
630,000.
630,000.
630,000. Right?
Yes.
Okay. So let's go up. So when we sum them, what would this give us?
2,650,000.
2,650,000.
So that will give us the variable cost of
2,650.
2,650,000. Right?
No,
Yes.
okay. Yeah, 2,650,000.
Now the fixed costs. Yes, the specific for wiper. Once we are making wiper, we incur the specific fixed cost. What's the specific for wiper? 140,000.
Yeah.
Yes.
Which one did we also make again? We make brake pad. So
Brake
specific
pad. Brake pad, yes.
150.
So specific for brake pad, how much?
150.
150,000. Then there is a general fixed cost, right?
Yes.
So the general fixed cost, that one, whether A or B, you incur it, right? Are you okay?
Yes, sir.
Okay.
Now the other fixed cost, how much is it?
60,000.
60,000. So when we add all this, what's the total fixed cost?
350,000.
350,000.
So the total fixed cost, 350,000. You can put 350,000 here. 350,000. So this is the total fixed cost. So when you add the variable cost and then the fixed cost, at the end of the day, the total cost will give you what? So what's the total cost?
3 million. 3 million.
3 million, right?
Yes, sir.
Yes.
So that's 3 million. We've answered the question. Then now, it says we should state 3 factors to be considered when setting selling price of a product. That's just by the way. Tell us, what factors should we consider when we are setting selling price? Factors
Elasticity.
consider when you are setting selling price of a product. Yes, when we are setting up a selling price, what should we first consider?
So
One,
elasticity demand.
we must
The
consider
profit,
The cost of production.
we must consider our cost of production. Then 2,
the
company's
profit,
profit policy, yeah? The profit policy or the margin. Are you getting it? Whether it's a
Yeah.
margin, whether it's a margin or markup, eh?
yes,
We
sir.
also consider the competition.
That is elasticity demand of the product.
A margin or markup. What other factors? Hey, please talk. These are economic issues. When we are
Elasticity
selling
demand of the product.
good, these are normal questions. Sometimes I see you throw something in to see if you are in the market. The demand for the product, yes. Whether it is price elastic or price inelastic, exactly.
Yes,
Yeah.
sir.
So whether it is price elastic or price inelastic. You know, there are some products, immediately you change selling price slightly, you know what will happen.
Yeah.
You have to also consider your customers, the people you are selling the product to.
Yes.
So yes,
The customer preference.
customer behavior. Yes, customer behavior. You also need to look at the level of competition,
Yes.
Yeah.
You also need to know the level of competition in the industry. You need to know the level of competition in the industry. Yes, you also need to look at what regulations. Is that clear?
Yes.
Price, like minimum
The
price,
book.
maximum price. Are you getting it?
Yes,
That's
sir.
minimum price and maximum price. You know, price control, eh?
Yes.
If there is price control there, you can't
Yes.
just wake up at all and put your price. Yeah, there are so many
Put your
factors.
price.
Give me some. There are
Just
so
like
many.
the pool.
Mm. Give me some. There are so many factors. Yes. The nature of branding of the product, all these things. Yeah, this is how you should just state some three of them and get the three cool marks. So we have finished solving the question. I think we've solved about 6 questions or 5. About
Let me see.
So 4.
now, those who want to take
Wow.
this solution, I'm writing down for you. Please take screenshot of this solution. Take screenshot. You did it up to a certain level, so take the limiting factor part. I think the limiting factor part, you have not taken it, so take that one. Please take the limiting factor part. This is the first page. Take the first page. Please take screenshot so that we can close. Take the first page. Are you okay?
Yes, sir.
Yes.
Can I move?
Yes,
Yes.
please.
Take second page. Are we okay?
Yes.
Yes.
Can I move?
Yes.
Can I move?
Yes.
Yes.
Yes, take third page. Can I move?
Yes,
Yes.
please.
Take fourth page. Can I move?
Yeah.
Take fifth page. Are we okay?
Yes.
Yes.
And then the last page. Are we okay?
Yeah.
So let me check. How many questions have we solved so far? We solved Agri Limited 1. We solved Mercy Limited 2. We solved Melbourne 3. Then we solved what? Dulo, eh?
Who will pay?
Dulo Limited 4. Then we solved Obebe 5. And then we solved this one 6. So we solved 6 questions, right?
Yes.
Okay. So in our next meeting, I think now that you've gotten the understanding to move, in the next meeting, if we solve about some, today we delayed a bit because of issue, we solve about some 8 more, that'll be 14. 14. Then another meeting, we solve about 6 more, that'll be about 20. So if we solved 20 different, I mean 20 questions across many areas, the rest I can leave them for you to practice before we get to revision week. Is that clear?
Yes,
Yeah.
sir.
So once we do that, then we start with variance. So I'm also putting together the past questions on variance for you, like I did. So please take note of them, revise them very well. You see, the strategies is what matters. If it is
Yes, sir.
shutdown decision, you run it on contribution basis. If it is make or buy, relevant cost of making against relevant cost of buying, you get the point. In
Yes.
that order, and limiting factor, you have to assess the scarce resource, do contribution analysis, find contribution per limiting factor, rank them, and produce according to the rank. Do that. So
You
in
do a
our next,
perfection thing.
I'll look at questions that has to do with special order and then cost volume profit, that's CVP, in
Yeah.
this document. So go through the document and identify the possible CVP questions in it, and then special order. When I come, draw my attention, we solve them. We solve about 8 more, and then the next meeting. So it means that by next week, Thursday, by this time, what is today's date? What is today's date?
Today is
Today
22nd.
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 Second. So by 29 by this time, we might have finished with decision making. Then we start with variance. So in the first week of, what do you call it, February, we will deal with variance. So I'm sure by the third week in February, we might have finished with performance evaluation. So now we sit down and then we do the last week, we do revision. So the revision is going to take care of some key theoretical areas. After all, what are we looking for? If you have understood budgeting, the calculations, you've understood budgeting, you've understood short-term decision making, you've understood variance, and you've
Yes.
understood performance
CVP.
evaluation,
Performance evaluation.
and then you do a little theory, I'm not sure we'll record any casualty. Please, the rest of you who have just joined, a lot of the videos are on YouTube for you.
Yeah.
Get the YouTube, go to YouTube and search for Prof Training Solution. Click on the channel, Look at the videos. Go to videos and look at them. Those that you don't get clearly. I mean, some of your friends are there. I've appreciated one particular guy. One particular guy, I've not even taken note of the name. He has sent me so many messages. I mean, explain this, and then at my free time, I keep on explaining to him. Then sometimes he will call. And you see, when somebody is calling so much, asking you to explain something to him, the nature of the question the person is asking alone tells you that he is learning. Are you getting the point?
Yeah.
If you look at the kind of question the person is asking, tells that he is learning. I've had a few students who call me, oh, sir, when you solve this question, I didn't get how you treated this word. Then it tells me that you are learning. Because if you are quiet, does it mean that all that we've solved, you want to claim you understand everything 100%, and so you don't care? Please find time and do the revision. Spend time on the course, because you are now moving into the computerized system. Make sure that at least, if not for anything, you find your way out of this ICA trouble before the computerized system is into. You know it will come with consequences, right?
Yeah.
So avoid the consequences. Learn now, pass your paper, and walk away before the trouble starts. A word to a wise is enough. So I believe we've had a good day. It's 6:36. Let's prepare for work. We'll meet again on management accounting, I think next week, Tuesday. Between now and then,
Yes.
good
Sir,
Lord.
so please, what's the name of the channel? Your YouTube
Prof
channel.
Training Solution.
Please put it on the page.
Thank
Put it
you.
on the
Thank
page.
you. Thank you, Prof.
Guys,
So,
share
my
the link.
I
Share the link
started
on the page
referral.
for them.
Yes. So
Mm.
we'll meet again next week.
Yes,
Thank you.
sir.